All right, everybody, today we are talking about the $50,000 mistake that sellers are making, and I don't even think they know they're doing it.
No. So if you're a seller and you're about to interview agents to list your property, this one is for you.
That's right, here we go.
Hey everybody.
Sean and Kelly here, Price and Price Group of Samson Properties, and by the end of this video, you will have all the information that you need to avoid this $50,000 mistake.
Yeah, so it's a growing trend.
Yes, growing trend, yes. So you may not know this and you may not be aware, which is the same thing, but there is a trend out there of brokerages that are really pushing hard for office exclusive listings. And they're presenting it in a way that is that seems very beneficial to the seller.
Well, I mean, a good salesperson would do that.
Yeah,
right?
absolutely, absolutely.
And I think office exclusive strategies is just that. It's very, very good as a part of a strategy, but not the whole concept of how a property should be listed for sale.
100%. So we need to dive into who actually benefits from the office exclusive strategy, how it should be worked, and just how you can avoid this mistake.
And why it does not benefit you, seller.
Yes, absolutely. Okay, so what are you going to hear when you sit down with an agent that pushes this as a major part of their marketing plan? You're going to hear that it's going to be a low stress approach for you. You're going to hear that they have a nationwide network of agents that are going to have access to your property. So if they're California buyers or if they're New York buyers, which are the treasured buyers because our market is not expensive compared to theirs, they're going to tell you they all have access to your property. They're going to tell you it's going to be low stress, no open houses, no high traffic, hundreds of showings in a weekend, no need to keep the property in showing condition, no need to prep the property. They're going to make it sound like a very, very easy process.
Okay, let me hit your points.
Okay.
All of that is true.
Yeah.
Okay, so we have access to a nationwide network of agents. That's true.
Yeah.
It's just within their brokerage.
Exactly.
That's true, but they're not the biggest brokerage.
No.
And
even if it is one of the big nationwide brokerages, it depends on that brokerage's structure, because a lot of these large brokerages have independently owned offices, and those independently owned offices are the only people that can see.
Yeah, that's true.
Yeah.
They say, I think you hit on the ease of the transaction. So you won't have to hold your house open. No open houses if you don't want that.
Right.
Unqualified buyers coming into your house to see it.
That's right.
That's true.
Those are true. Yeah, absolutely.
And there are people that might work with.
Yeah.
Like if you have certain extenuating circumstances in your family situation, illness, or you have a new baby or whatever, it may work for you, and that's fantastic. But let me clarify this too. Pretty much all brokerages do office exclusive. And if you're a seller who needs that only, then we're all willing to do that.
Yeah.
But to pitch that as like the way they're going to market your property always, that's what we're talking about.
Yeah. So what is missing from an office exclusive situation and an office exclusive pitch, in our opinion?
The biggest one to me is their fiduciary responsibility to you.
Yeah.
Every client we have, or whether we're representing the buyers or the sellers, we owe you that responsibility. Your best interest becomes our best interest. If you say that you want to sell your house for top dollar, we are not serving you by putting your house office exclusively.
No, that's a good point. So you hit on a point a minute ago. You said that there are situations where it could be beneficial. Somebody who has a personal situation. There are some people who require privacy. They don't want people to know that they're selling their house. They want it to be just a very limited buyer pool.
Especially in our area. I mean, we're in the DC metro area.
Yeah.
There are those situations.
Absolutely. Sure. So there are situations where this could work, and it's also a really, really good strategy as a part of an overall strategy. For example, we had 2 listings that were in office exclusive status in our brokerage, which here in the DMV is the largest brokerage in the area, which gives access to 14% of the marketplace versus the other brokerages. But anyway, it's a side note. But these clients put their property in office exclusive because they had tenants in place. And they wanted to be able to market it a little bit, take advantage of some of the advantages that we have when a property is listed, like a free home warranty and stuff like that.
Right.
And they were actually able to talk to investors who might take the property with the tenant in an as-is condition. Neither one of them got the offer that they wanted, so we went to market with them. They got above market price, and everything worked out for them. But it's just a part of the strategy.
Yes, not the only strategy.
That's right.
Okay, so
Yeah.
I always ask this question. Anytime I'm like, why would they do that, right?
Yeah.
Something new. I'm like, okay, who stands to win?
Who stands to win?
So who's gonna win?
100% every single time when an office exclusive transaction happens, that brokerage wins. Because here's what happens. You have a buyer side of the transaction, you have a seller side of the transaction. When on the open market, more often than not, it's going to be two different brokerages on those two sides of the transaction. If it's office exclusive, it's only those agents from that brokerage. So they get to do what's called double ending. The brokerage gets both sides of the transaction.
Mm-hmm.
That equals more market share, that equals more profit for the company, and that equals more overall exposure,
Right.
and it positions the company in a stronger position.
Yeah, so keep in mind, I know sometimes people have difficulty realizing my agent is my agent gets all the commissions of my agent. No, it's the brokerage, right? Like we
Right.
have a boss.
That's right.
So the big brokerage, let's call it ABC
Mhm.
Realty, they have all these different realtors, and someone from DC,
Mhm.
you know, could be selling it out of a totally different office, but not
yeah.
brokerage.
Yeah.
But that brokerage is still
Yeah.
double benefit.
And that doesn't mean the agent's double ending it. So an agent sometimes, if they have what's called dual representation, they get double the commission because they're on the buy side and the sell side. That's not what this means. This
Right.
doesn't mean, because there's probably two agents on the transaction, but they're both the same brokerage.
And let me make a point. You might talk to an agent or be friends with or family with an agent who works for one of these brokerages. There are some really incredible
Yeah,
agents out there who have to do this. They're just working within the confines of the company they're with.
That's right, that's right. Who else benefits from this? The buyer, and we're gonna get into that in a little bit, because the buyer absolutely wins in an off-market transaction like that. And I wanna bring up a point. This is brought about because there is a large brokerage, one of the largest brokerages in the country, that's pushing for this kind of situation. And they actually claim that 30% of their transactions happen in their office exclusive status. That means that 30%, in our opinion, of the sellers likely did not get top market value because they had limited exposure.
Right.
Yep. Okay, so we've explained to you the negative, we've explained to you how this could cost a seller money. So what is the best strategy going forward for sellers?
Sellers definitely interview agents,
Mm-hmm.
but know your goals. And if your goal is to get as much from your property, the sale of your property, as you can, ask the agent if your home will be listed everywhere on the
Mhm.
multiple listing service. Specifically ask Zillow, is it gonna be on homes.com, all of the sites where everybody looks. If the answer is anything but yes, the more words without a yes,
That's a red flag.
that's a red flag.
That's right, that's
Anything
right.
other than yes, just thank them for their time and tell them they should look into Sampson Properties as their brokerage.
That's right. You can actually get a little bit detailed with them. You can actually say, is the way you're going to market this property through the office exclusive program compliant with the multiple listing service? And that's going to be an important question, because if it's not, then that property will never be allowed to be on Zillow when it comes out of office exclusive status. It will not be allowed. So even
Well,
when
and
it
I was
goes out
giving
there,
you a less technical way of asking that because you might not remember to use those words.
Yeah.
So just ask, is it gonna be syndicated to Zillow?
yeah,
Is
because
it gonna be on Zillow? And if
Yeah.
they say anything but yes,
then that's trouble.
Then
And
no.
why? So tell me
more
who.
words.
Tell me, Kelly, with as few words as possible,
Oh.
who does this benefit the most?
Buyers.
Absolutely.
Oh my gosh, it's a golden ticket for buyers
Yes.
because they don't have as much competition.
Yep.
We love this for our buyers who are having a really hard time finding a home at the top of, they have this kind of budget, no
They're
wiggle
being
room.
Beat out.
Guess who we call? We call agents.
Mm-hmm. Or agents actually reach out to us because once they go active, they're not getting any traffic because they're not allowed on Zillow. That's a
Yes.
huge point. Gotta hit that
Yes,
point.
and we will play
Yes.
when we have to because our buyers are gonna get contingencies. They're
Mhm.
not gonna pay as much for the property.
That's right. They're
Which
not gonna be in a bidding
sellers,
war.
you're not gonna get as much for your property.
That's exactly
and
right.
you're gonna get contracts with contingencies.
That's right. So if you
All
want
of
to be
them.
that seller, that is
Right.
the key.
Right.
And again, sellers don't know this. So let's say a seller theoretically signs with one of these companies. they go through, they get the property sold. Let's say it's a $700,000 property. They get the property sold in 2 weeks in office exclusive status.
Yeah.
They get their $700,000 and they're all excited and they're happy.
Yeah.
What they don't know is if they had hit the market, they may have gotten 725, 750.
Well, we just heard about this.
Yes,
We
yes.
heard about it. It was a different price point. Trying to remember where, it doesn't matter where it was. But their neighbor, they were like, they just sold, or went on the market 2 weeks after
Yes.
these other people did, and they got a lot more. I think it was
50,000
over,
more,
yeah.
Yeah.
Yeah, it was a lot.
So it's really you just really have to be educated on this and understand this as you're going through the process.
Yes, your circumstances have to warrant leaving money on the table.
100%. That's a great way to think about it. That's a great way to think about
I
it.
think about things in a great way all
All
the time.
the time. All right. So bottom line, if you want to get the most money for your property, maximum exposure creates maximum demand. Maximum demand creates maximum profit. It's a supply versus demand thing, and the demand out in the market right now is higher than the supply. So it is a seller's market. So it's really not beneficial unless you have one of these extenuating circumstances. Yeah. So if you would like for us to analyze your situation, to have a conversation with you,
Buy side or sell side.
buy side or sell side, we'd be happy to do that. Just reach out to us. What's the number?
It's 703-783-2143.
For those of you who are new and have not seen Kelly for a year, she had the hardest time remembering that phone number.
I did, and it hasn't been quite a year, but I've been very busy.
Yes, you have. Oh, what? Shall we?
You want to say it now?
Let's do it. Okay, go.
I
Kelly, what have you
am
been
now
doing?
your friendly, local property and casualty insurance
Yes.
girl,
Yep.
woman.
So as you all know, Kelly is also a licensed lender. So she can guide our clients, both buyers and sellers, on qualifications and navigating that process. Well, now she's also I don't even know what the what
Yeah,
that
I
term
can
is you
sell
just
your
said.
personal and commercial
Yeah.
lines.
But
But
she
really,
can,
we saw a lot of issues coming up with people being able to get their homeowner's insurance
Mhm.
in time with
Yep.
settlements, and I thought, hey, I can help with that, and I'm good at tests and learning things, so I did that. I can help you with all of your insurance
That's
now,
right.
except for life and
That's right.
annuities, although, who knows? Maybe
All right.
one day.
All right, guys. Have a great week out there. If you have any questions, put them in the comments or reach out to us, and we'll see you guys next week.
Bye. Hello, everybody.
Sean and Kelly here, Price and Price Group of Samson Properties. And what are we talking about, Kelly?
Today, right now, in this moment, we're talking about the market snapshot.
Yes, you got it.
It's what's been going on in the Northern Virginia real estate market in the last 7 days.
And hopefully under 5 minutes. Yep.
We'll make it under 5 minutes.
Yeah,
It's
maybe.
really boring.
Here we go. All right, so we are diving into the last 7 days of the Northern Virginia market, as Kelly said. And again, just a quick rundown for those of you that are new. We are looking at lead measures, so this gives you an idea of what is happening in real time. So this is the last 7 days of properties that have gone under contract and new properties that have come on the market. So it gives us a comparison so we can let you know what to expect in the market.
That's right. So your top graph there, the black squiggly line, that's
Yes.
the buyer activity. That's how many homes have gone under contract.
Mhm.
And then the teal line, that's the seller activity. That's how many new homes have come on the market.
That's right. So as we saw last week, with the spring break weekend and the Easter holiday, we had a huge drop in buyer activity, and we had a steady increase. We continued increase in inventory. So last week we got down to, if you look down here, almost into a normal market.
Yeah.
But this week the buyers rebounded and they shot up huge. So
They're like, not so fast.
we're not done. But the sellers also jumped up.
Yeah.
So where are we compared to last year? So last year, inventory is here right now. If you go across, inventory was down here. So we've got more inventory, which is actually quite good. And then buyer activity at this point is here, and last year it was down here. So overall, the market is actually much more active buy side and sell side this year than it was last year.
They don't tell you that on the news now, do
They
they?
don't, absolutely not. And you can see we are also trending in a very strong upward pattern, both inventory and buyer activity. So if you go down to this market, or this graph down here, this just takes this and puts it into a representation so you can understand how strong the seller's market is. So this neutral line is what?
That is the normal market. Very equal, not buyer's market, not seller's market.
That's right, that's a good, healthy market. Anything above that's going to be considered sellers. Anything below is going to be a buyer's. And we have been hovering in a pretty strong seller's market. We dipped down because of this dip in buyer activity, and now we're back up. So if inventory can keep up with buyer demand, then we'll stay in a fairly healthy market. But if that buyer demand keeps on outpacing inventory, we're going to get back into that strong seller's market again.
Yeah.
So
We don't want that.
So what does this mean in the real world for buyers and sellers? So let's look at what contracts are looking like. So this is the contract trends for the last 7 days, April 7th through April 13th. And this is from Cardinal Title. They had 212 contracts come in. So that's a large sampling, gives us an idea.
Yeah.
You can see that contract price, 45% of properties went above listing price, 35% went at listing price, and 20% went below. So 80% of the properties went at or above listing price in the last 7 days.
I want to talk about that for a second.
Let's do it.
I'm actually very surprised to see the 20% lower.
Mm-hmm.
And the reason I'm surprised is I feel like I'm seeing more agents list properties initially under the expected sales price.
Mm-hmm.
So I'm not surprised to see higher than list price because they're intentionally listing it lower.
Yeah.
What do you think is the 20% is?
I think those are, excuse me, stubborn sellers, but I think those are stubborn sellers.
We got one of those.
Yeah,
Okay.
they're just not going to bring it down.
Okay, they still have the pandemic mindset of.
Well, they have the pre-pandemic mindset of where you have to bid, you have to price high because they're expecting and negotiating.
Okay.
Or the pandemic mindset of I can just put it on there and just sell it.
And okay.
Yeah, so it's one of those two things.
Okay.
So what is
but
that?
I am right about that. I mean,
Yeah.
that is kind of a newer strategy we're seeing.
Well, it
that
is.
I would want people to be aware of. So, if I'm right,
Mhm.
correct me or say yes
No,
first.
it is. It is correct. And I think the reason why is because we just came out of a winter that was not very aggressive. So sellers actually got a little more realistic, so there are more sellers that actually will follow that advice versus before.
Okay, so buyer, if you're a seller, don't be surprised that you're going to get that advice and it pans out.
Yeah.
We give that advice.
Yeah. We just had a property going to contract in 1.5 days for 11% higher than asking price.
Right.
Yeah.
It was a great strategy.
It's a condo. Yeah.
But if you're a buyer, settle down. Don't think that every listing is listed for the price they expect to get it
That's
at.
a really good
That's what I
point.
want. That's kind of that's what I want to say.
That's a really good point. And that's if a selling agent is using that strategy, they have to communicate to the buyer's agents and any buyers they talk to that this is where we are because this is where the buyer's pool is, but this is what the seller expects.
And your buyer's agent needs to really know their market so that when they're taking you to show you properties, let's say your budget is $600,000 and they're taking you to see one that's $575 and you're thinking this is great, they need to tell you, hey, look, this is likely going to be
like 625.
So, exactly.
Yeah, exactly.
Like
that's right.
we may need to let this go through the first weekend.
Yeah.
Before I take you to see this, because you do not want to get your hopes up for something
Right.
that is like out of reach. That's a sad thing.
And that's a really good point because then if you go down here to days, you're welcome, Kel. If you go down here to days on market, now again, these were all Virginia specific numbers.
That we're talking about. That's our main area.
Yeah, but if you go to Virginia specific, you can see that 85% of properties sold in 21 days or less. Only 15% went over 22 days. 15% went over 22 days. 20% went under asking price.
Yeah. Okay.
So this just shows that buyer's agent really has to have an understanding of the market and what's going on with that,
Yeah.
so then they can tell the situation for each individual property. 86% cash, or finance, 14% cash. Money's money, that doesn't really matter. Cash buyers, if you think you can come in with a discount because you're a cash buyer, it really doesn't do you that much good unless all of the other terms are beneficial and you don't have somebody else offering those same terms at a higher price.
That's exactly right.
Yep. Okay, so whoops, wrong one.
That reminds me of our cash isn't always king.
That's right.
Video.
That's right. Okay, so finance contingencies. Buyers are still getting contingencies. 67% got their finance contingencies. 60% got their appraisal contingencies, so that's good. Even the majority is still getting inspections, 64%. So 36% did not, and we're seeing this number starting to increase more towards the no. But I'm
It
surprised.
doesn't mean your agent can't get you a pre-offer inspection.
That's right, absolutely. I would venture to say that at least 80 to 85% of these people are fully protected. They get a pre-offer inspection or something along those lines.
I agree.
Yeah. And then sellers, you still have to be willing to, if you want to compete against other sellers, 97% of sellers on these contracts, and we're always between 97 and 99% of the sellers are offering buyer agent compensation. So you may think that you don't have to, and it is fully negotiable, but if you opt out of it, you are competing negatively against 97% of the other
Here's
sellers
why.
out there.
You're limiting the offer price a buyer can give you, because if they only have so much money,
Mhm.
and if you cover their buyer compensation, their buyer broker compensation, then they can max out their budget,
Yep.
right? If another 2 to 3%,
On top of their
that's a
closing
lot
costs.
that if they have to come out of pocket to pay their brokerage, then that's money they can't give you for your house.
Yeah, especially, actually, that's money they can't give you for the house, and it will actually prevent them from offering on your house because they won't be able to pay the agent, and they're under a contractual obligation to pay that agent. And there's gonna be another seller, 97% of them, that will pay that compensation. So you're gonna be
Right.
steering buyers to those other properties.
Right,
Yep.
that's true.
Okay, so what does this mean overall? Buyers, it's all about being strategic with each property. You are gonna have to compete on some.
Mhm.
Some you're gonna be able to get at asking price, even if it's brand new, but you have to understand that's an accurate asking price. And then you just have to know each individual property.
Your agent has to know the market.
That's exactly right.
All the pockets, and seller stage, presentation,
Mhm.
price right, get with an
Communication.
agent who knows what they're doing, knows the appropriate strategies for your buyer pool, because it's different,
Yeah,
and just listen.
yeah, absolutely. Yeah.
I mean,
and-
don't not get what you need,
Yeah.
but you have to listen to their strategy on getting you what you need.
If they're giving you a sound strategy and they have proven track record, then you're gonna get what you want because this is a seller's market. But if you go against the strategy, you will end up sitting, you will end up getting below asking offer price if you get any offers. So, and we've seen clients lose in $1.3 million properties over a $6,000 difference because of
We have a listing that we've had, I think Jesus was the first person to put an offer on it. And it was about $100,000 under ask. And they were not gonna take it. They knew they could get a certain amount.
Yeah.
And fast forward 2026 years later, now they have since lowered the listing price to way below that.
Yes.
And buyers are offering less than that
Yeah,
now.
yeah.
And it's still listed.
And these are made up numbers, but the actual situation did
It wasn't
happen.
really Jesus.
And it wasn't really $100,000 under, but they are literally listed for a large percentage under what that previous offer was, and they're still getting lower offers.
Okay, so some of you agents out there, you do your business in a way, it's like, why do you still have that listing? Well, these people are really great. I mean.
They are awesome. Yeah, we love working with them. Yeah. Okay, and we're gonna help them reach their goals. It's our job to help you reach your goals, no matter how long it takes. All right. If you would like to get with us, either buy side or sell side, just to talk about your situation, we'd be happy to do that.
Or lending advice,
or lending or insurance.
insurance.
Yes. All right.
Okay,
All right.
703-783-2143.
All right, guys. We'll see y'all next week.
Bye.